We're now ready for the conclusion of our Chapter 20 lecture. We left off talking about and discussing the banking crisis of 2008 and who was responsible. We're now talking about how does the government protect your money. So again, the housing bubble in 2008 forced a sharp decline in home value. When homeowners discovered they owed more on their mortgage than the home were worth, many stopped paying off their loan. As a result, the banks foreclosed on their houses. While home prices have since risen in many areas of the country, some areas have been slower to recover. So the question is, has the housing market fared or recovered in your hometown? Send me an email with your response to that question. The blank is an independent agency of the United States government that insures bank deposits up to $250,000. If the answer is A, B, C, or D. If you said C, C is the correct response. The Federal Deposit Insurance Corporation is an independent agency of the U.S. government that insures bank deposits up to $250,000. Meaning that if you have your money in a federal bank, and pretty much all banks or commercial banks are part of the Federal Reserve System, if something was to happen to that bank, your funds are protected up to $250,000. There's also the Savings Association insures funds. It insures those holders of accounts in Savings and Loan Association. So the FDIC is for commercial banks. The SIAF is for Savings and Loan Institution. And then for the credit unions, they have NCUA, which is the National Credit Union Association, that also provide up to coverage of $20,000 per individual depositor. Okay, so these are organizations set aside by the government to protect the funds that you have currently with commercial banks, savings and loans, or with your credit union. Okay, now in 2023, we use technology to make banking more efficient. So most things now are done through what we call EFT, electronic funds transfer. So now, of course, you can deposit your money electronically with uh, getting direct deposit. You can pay your bills electronically. Most commercial banks have what we call e-bills, where allow you again to pay all of your bills, which I love it. I pay all of my bills electronically using what we call the e-bill system, which is quicker and more economical than paper checks. Of course, you get your debit cards, which can serve as the same function as your checking account, where you can withdraw funds without writing a check. So most firms use payroll debit cards to pay workers, or they either use, get off my screen, or they will allow you to have direct deposit to your actual account. Okay? Let me get this off my screen. 1 second here. I'm going to have to end this first and come back to do this. I'm not trying to buy this software. Go away. All right. So now I'm back to the slideshow. So again, you're using your debit card, EFT, get where you can pay your bills online. You can see your paycheck electronically. These are functions that we're used to because of the use of technology. Now, there's something called a smart card. I don't have one of these. It's a combination of a credit card, a debit card, could be a phone card. Pretty much, it's a small portable device with embedded integrated circuits that can store and process data. So a smart card can be used to pay your bills. It can be used as a form of ID. I'm told that there's many benefits of using this smart card. I haven't seen one in person, but I'm curious to get a copy of, not copy, get my hands on one to find more about this smart card. So, of course, a direct deposit is when a credit is made directly to a checking or savings account in place of a paycheck. So, again, most companies now pay their employees using direct deposit. Very few issue a paper paycheck anymore. A direct payment is a pre-authorized electronic payment, so you can pay your mortgage, your car note, your credit card payments, but you have to authorize those payments, allowing them to take funds out of your checking and or savings account. So online banking. Top U.S. retail banks allow customers to access their accounts online, and again, most have bill paying capacity. Again, 2023, most of our banking needs are handled online. I rarely ever go to a physical bank anymore because I can handle pretty much most of my banking transactions by doing that online. There are some banks that are completely online, which which they offer slightly higher interest rates, meaning for the savings account, and they have lower fees due to low overhead. Now, with these banks, of course, you can't go into a physical location to get any money out because they're completely online. So, of course, with online banking, security and privacy concerns remain. Whenever you're doing things online, we're always concerned about the security and our privacy of doing online transactions. Our last topic focused on international banking and banking services, making transactions in other countries. There's something called a letter of credit, which is a promise by the bank to pay the seller a given amount if certain conditions are met. So let's say that a buyer is wanting to purchase something from the seller in another country. The buyer may give to the seller what's called a letter of credit, which is a promissory note by a bank saying that, okay, well, once you have sold the product, or once you provide the actual service, then the bank is agreeing that they're going to make sure that you get your money. So a bank's acceptance is a promise that the bank will pay some specified amount at a particular time. Okay? So money exchanges allow companies to go to a bank and exchange currencies to use in a particular country. So let's say that you were going to Europe. And of course, you have your money in our currency, the US dollar. Well, there are certain banks where you can go and exchange your US dollar for the euro. Now, depending upon which rate is more favorable at that point in time, that will determine how much you're going to get back in exchange from one currency to the other. Okay? Lenders in international banking. So, of course, today's money market system is a global market system. We are able to do transactions with companies all over the world. So, the net result of international banking and finance has been a link to the economies of the world into one interrelated system with no regulatory control. So, the control that we talked about earlier in this chapter were in the United States. But with international banking, there really is not any controls per se because now there's so many countries involved that it would be hard to have one organization that can say these are the rules for international banking. However, there are some organizations out there for international banking. We have the World Bank and we have the International Monetary Fund. The World Bank lends most of its money to less developed nations to improve their productivity and help raise standards of living and quality of life. So, for those countries that may not have a well developed banking system, the World Bank is there to help those nations out. The international monetary funds It's a cooperative monetary policies that stabilize the exchange of one national currency for another. So what the MIF does, it makes it possible that again you can exchange your US dollar for the euro, for the yen, or other forms of currency. There are about 189 countries that are part of the IMF, including the United States. Most of the major countries are part of the International Monetary Fund. However, this is our last slide. There have been protests against the World Bank and the MIF. So the World Bank and MIF are intergovernmental organizations that help support the global banking economy. But both draw protests for their actions. Your assignment is to do research and tell me why other people protest against both the World Bank and the International Monetary Fund. I like to end our lecture on suspense. All right? So that will conclude our chapter 20 lecture. Feel free to contact me with any questions. Have a great day.